Hello, 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 and welcome to Trading Made Easy right here on YouTube. Certainly glad you found yourself here. And for those of you that are new here, welcome. What you're going to find here is simple, easy trading methods that's designed to get you at least 20 to 25 pips consistently. And the reason I focus on 20 to 25 pips consistently is because most traders are not able to consistently get 20 to 25 pips. And until you perfect one thing first, you'll always be on this never ending seesaw, losing your money basically. So I'm here to show you simple, easy ways that you can look at the market, simple, easy ways that you can analyze the market, simple, easy ways that you can position yourself for consistent pips. Now, can you get more than 2025? Absolutely you can. But the goal is to lock in the 25 and then run with the rest so that you put yourself in a position where you are risk free. That's what you're going to find here. So if you're looking for clarity, if you're looking for simplicity, you certainly have come to the right channel. So go ahead on and just hit that subscribe button. And if you don't find value, you can unsubscribe. I mean, you have to find what works for you. But this is the platform that you're going to get those simple clarity in the market that so many traders need. Oh my gosh. If you don't have clarity on the charts, you will not have clarity in your mind. So with that being said, let's jump into it. Today, I am going to be sharing with you 4 simple steps to easily analyze the Forex market. So when you're going in and you're analyzing price, I'm going to show you in 4 simple, easy steps that you can do that so that you can begin the framework to position yourself for consistent profits. Okay. So the first thing you want to do, and this is what I do, is I go to my weekly chart, and I'm going to be looking for the previous high, the previous candle, the high and low of the previous close candle. That's what I want to say, right? So in this case here, we see that the current weekly candle has already exceeded the high where this wick is of the previous week's candle. So with that being said, I'll go to the next high, the next previous high that's above where the current candle is. So with that being said, I'm going to drop me a horizontal line right here because it's above the current high of the weekly candle. Okay. And then I'm going to do the same for my support. I'm looking for the previous low, on for the support. Okay. So the previous low, now I know this is lower, but the previous low is what I'm looking for, right? Remember, this is a weekly. We're not swing traders. I'm not, and I don't teach that. I just want to get the framework and identify the parameters because this is where price is going to move within those parameters until it breaks it, right? And so when you identify the parameter, this is where your pips are within those parameters. So that's step 1. Go to your weekly, identify the previous candle's high and low. And then you want to drop down to your daily. And my friends, you're doing the same thing. Now, sometimes the daily high and low may be within the same range of the weekly high and low. And if that's the case, that's perfectly fine. You can still identify that with a different color horizontal so that you'll just know what price is doing in relation to the daily and the weekly. Okay. So with that being said, this is our current daily, and I'm looking for the previous close. If the current daily is higher than the previous close, then I go to the next highest area, just like we did on the weekly. So in this case, that is the case. So I'm looking at this area right up in here as the previous high, which happens to be the same area of our weekly high. So I'm just going to drop her just a little bit, just so that I can identify it. Right? Just so that I can identify it. I'm doing the same thing for our support, and it happens to be in the same area as well. Right? Now, when your weekly and your daily are generally in the same area, then what we're really approaching is a break, because we basically we're right at the brink of breaking the daily and the weekly. So we're looking for a break. It's testing both of those high time frames basically at the same time. So a break is potentially going to happen relatively soon. That's what that typically means. Now, could it do something different? Absolutely. But it's definitely worth you keeping your eye on so that you'll be prepared when it does break. Okay. So second step is to go to the daily and we identify the high and the low, right? Now, once we go down to the 4 hour, we're just looking, basically. We're just looking to see where is price in relation to those parameters. So we certainly see that price has come from this area of support. This is how price is here, right? And the question is, how did we get here? We hit an area of support. That's how we got to this point. And what price is doing is rallying its way to that daily high. That's what price is doing. So this isn't really a step per se, because you don't have to do anything other than just see where price is in relation to the parameters. That's what we're doing. Okay. And so that's number 3. It's really not a step, but I did want to go to that to share with you what I do. So now when we go to our 1 hour, now we're getting ready. We're getting ready to identify entries. We're getting ready now. On the hour, you're determining what you're going to do. Are you going to be buying or are you going to be selling? That is the question. When you get to the hour, and you can really do this at the 4 hour as well, but you want to be asking yourself, what position am I going to take based on what price is currently doing? Right? And so we already see that this move, if you wanted to buy, this was the opportune time to buy. This right here, right? And of course, you could have capitalized on that run. So what we know is that price is leading to the area of resistance. It's leading to the daily resistance, the daily high. And so you may want to consider positioning yourself for a sell, because at that daily high, being that it is a strong structure, the probability of price rejecting off of that is considerably high. Does that mean it will? No, because there are other confirmations that you want to add to support that decision. But as far as determining what you're going to do, and identifying where you're going to be looking for your sale, you want to be looking at this resistance area here, right? You want to be looking at this resistance area here. So we made the decision that we're going to be positioning ourselves for a sale, right? And with that, now you want to drop down. That's what we're doing on the 1 hour. What position are you going to take? That's what you want to ask yourself. What position are you going to take? Are you buying or are you selling? Buy or sell? That is the question, right? Now, when you make this determination, then what you're doing is determining, what you must do is determine your potential entry area. That's very, very important, that you determine your potential entry area, right? And so that's what you want to be doing on the hour. What position are you going to take? Are you going to buy or are you going to sell, right? And so that's that. Now, let's say you're going to buy. So right at this area here, I'm sorry, you're going to sell. This is the potential area that you're going to be looking to sell. So now let's drop down to our 15-minute. When you get to your 15-minute, you're looking to identify the actual entry, right? And this is going to be your entry point right in here. So right at this point is where you want to add your alert. That is step 4, right? That is step 4. So as price go up, cross up, where every time price hits that area right there that we identified, I want to be notified. So you want to select once per bar. And then we're going to put POT for potential sale at this point. Now your alert is set. You don't have to do anything else but wait for your alert to alert you. And when you come back, that's when you make sure that all of the confirmations that you're going, the additional confirmations that you're going to be using, everything is saying the same thing at the same time. It's really just that simple. Now the confirmations that I use, just in case you resonate with that, I use my MACD, right? I use the MACD 4C, which is here, and then your default MACD. And they need to be saying the same thing, right? With price. They need to be saying the same thing with price. I also use my 13 and my 62. Okay. And I throw this on when I get ready, to look for my entry, right? Because I like to keep my charts clear and clean for mental clarity, right? So when the alert alerts you, now what you're going to be doing is looking at your moving averages, where's price. So you have to have a set of entry criteria, right? And that entry criteria for a sale would be that we need a bearish candle to close below the 13. We need a bearish candle to close below the 13. We also need for our MACD to show bearish volume. Now on the MACD 4C, I'm looking for the MACD signal line in particular to be curving down, and I need that signal line to have breakaway. I need a break. I need airspace between the signal line and the histograms, right? So this is considered airspace. Whenever it breaks away from the histogram, that's considered airspace, airspace, airspace. So I need that, and I need it to be curving down, similar to like over here, right? Need to curve down. And as you can see, when you look at price in relation to this airspace, we are right up in here, and you can see price curve down. Price went down. And then on your default MACD, I need for the red line, right? My red signal line to be above my blue signal line. Okay. So they're both saying the same thing. It's just situated or read differently. Once I have all 3 of my confirmations saying the same thing at the same time, then I will position myself for an entry. So hopefully this was short and sweet. I will do more in-depth training inside of my private community, but hopefully this is giving you enough to where you can begin to just simply create the parameter, right? Identify your high and your low. Yes, and you can do this depending on the type of trader you are. If you want your 4-hour to be your pivotal high, then identify it on the 4-hour. I just happen to do the weekly and the daily. And the reason being is because those structures are stronger, and it increases my probability of price going in a direction that I'm positioning myself for. Much greater. So, but you can certainly do that on the 4-hour as well. So it would be your daily and your 4-hour. You would just omit the weekly, and everything else is the same. Okay. So hopefully this has been a help to you. If so, go ahead on and subscribe and join the community right here on YouTube so that you can stay abreast, so that you can learn simple, easy clarity on the charts that's designed to get you at least 20 to 25 pips. So hopefully that has been a help, and I'll see you guys on the next video.